Hello there and welcome to VA Home Buying 101. So if you are at all curious about how the VA home loan works, where to get started, and just want to get to know the program itself, this video is for you. So I'm Kimi Ortega and I'm a mortgage advisor and branch manager in Fort Worth, Texas. And let's get started. Yeah, we're excited to go through all of this. So what we want to do is we want to first establish what is the VA loan. So the VA home loan is not provided directly by the VA. Some people do believe that, but it's actually banks and lenders who supply the loans. And the VA is who guarantees those loans on behalf of the veterans. So they basically kick in case there's a default. They actually end up helping to make up some of the difference in the mortgage. So they take off some of the risk from the lenders. So as far as who is eligible for a VA loan, this is the service eligibility here. It's based on how many days of active duty you were that was served during wartime or during peacetime, or if there were any years of reserve service, or if you were activated during those reserve service times. So there are some cases where a service member's spouse is eligible as well. But if you have any questions about eligibility, please don't hesitate to reach out. There are some nuanced situations, and we're always happy to help with those. But this is in general what you're looking for as far as to determine if you are eligible. So as far as who can use the VA loan, so veteran or being active in the service counts. Someone who's separated from the service and their spouse, a veteran and another veteran can also be on the loan together. And there's also situations where a veteran and a non-veteran can be on a mortgage together. However, that is classified as a joint loan. So there are some differences, and typically a down payment may be required. So definitely ask more questions. It is not the same process if it is a veteran and a non-veteran. So we see a lot of those type situations where it's a veteran and a fiance. They're not quite married yet. That affects how the mortgage process is going to go. So definitely, if you're in that situation, just ask questions. Ask me. We'd be happy to help. And then also, a widowed spouse is eligible for a VA loan as well of the widowed spouse of the veteran. So the VA loan prior to 2020 had loan limits that mirrored the conforming loan limits, which in Texas is 726,200. But the VA actually does not stop there. They actually do not have a loan limit in reality. So I've had some people who have bought $1 million home and did not put anything down, which is pretty fantastic. There's no other loan program out there that's like it. So, as far as as far as the just overall, when we look at the VA loan versus other financing options. So, a question that I get asked a lot is, even if I'm eligible for VA, is that the best option? Is it better to go with a conventional loan or an FHA loan? So, in general, VA is, in my opinion, superior to all the other loan programs. So, VA, in my opinion, is superior to conventional. Conventional is superior to FHA, and then FHA is superior to renting. Renting obviously is not a mortgage, but if you qualify for VA, in my opinion, it is typically the best option to go with. But there are nuances to every situation or circumstance. So the main benefits of a VA loan is, first and foremost, there's no down payment that's required. Also, there's no monthly mortgage insurance because the VA is guaranteeing a portion of the loan. There is no private mortgage insurance required, which translates to a lower monthly payment than other loan programs that do have mortgage insurance. It's got more flexibility in its guidelines. A lot of times the terms end up being more preferable than other comparing programs. And because of the better terms, and also the no PMI, things like that, a lot of times it translates to increased buying power than if you were to try to have a similar payment on another loan program. You would end up having to back your purchase price down just because of some of those differences there. And then also VA has a pretty awesome streamlined refinance program. It's called the VA Interest Rate Reduction Refinance Loan, or VA IRRL for short. We can always talk about that separately, but the VA IRRL is a very easy way to refinance when rates improve in the future. So the one thing that's important to understand is that the VA does charge a funding fee, or it's a guarantee fee, for basically for insuring the loan or guaranteeing the loan. So, how much you pay in a funding fee will depend on how much you're putting down and also if you have used those benefits in the past. So, in a case where it's someone who is purchasing or using a VA loan, it's their first time using it, then typically the common funding fee is going to be the 2.15%. Now, in a circumstance or a situation where you're using your VA benefit for a subsequent time, which you can use it as many times as you want, so that's sometimes a myth. People think you can only use it once. But anytime you use it for a second time, if you opt to not put anything down on future transactions, then that funding fee does increase to 3.3%. But if you're willing to put a down payment of 5% down, you can get that funding fee back down to a considerably less fee there. Now, that fee is typically rolled into the loan amount. That's not something that you have to pay out of pocket. So VA does allow for you to roll that in, which is pretty nice. Now, if there is any service-connected disability, if there's any disability from the VA that's 10%, usually the starting point is 10% or greater, then that funding fee is completely waived. Then there's nothing paid to the VA for that. So let's do some true or false. So VA loans do not require any down payment, so I will not need any cash at all to purchase a home. The answer is closing costs always exist. So the question is who pays them and how? So closing costs are two separate categories of closing costs. There are your true non-recurring closing costs, they're one-time closing costs paid at closing, and then there are also prepaid expenses. And so there are three ways that closing costs can be paid. You can pay them out of your own assets, your own savings, or gift funds, something like that. Or as the lender, we can secure down payment assistance grants or other types of benefits to help cover that. Or the seller also can pay them as a part of the negotiation. Right now, here we are in 2023, in our current market, we are seeing a lot of sellers paying for closing costs. So it just depends on what the market is like at the time that you decide to purchase. So the down payment assistance or closing cost programs that we work with that are available in the state of Texas, we have the TDHCA has the Texas Home Buyer Program. There's also the Southeast Texas program, which is the SETH program. There's also TSHAC, which is the Texas State Affordable Housing Corporation. And then we also are part of the Homes for Heroes program, which helps us give back to those who serve as well. So as far as seller contributions go, which is a very common way to help get closing costs paid for, just so that you are aware, VA allows for the seller to contribute 4% of the sales price towards your closing cost. And the VA actually allows for those seller concessions to be applied towards debt. So if there is, as far as, an example, we had a situation where someone was getting a down payment assistance grant to cover closing costs. They also had seller contributions or concessions going towards everything, and we actually ended up with too much money. So VA is the only loan program that allows for that excess money to be applied towards debt. So we were actually able to use that surplus versus forfeiting it. We were able to use that money to help pay off a credit card so that money wasn't just lost. So VA allows for some really cool things like that. Now, another true or false with a VA loan. VA loans are only for first-time home buyers. That is false. The only restriction is that VA must be used towards a primary residence, so you cannot use it to acquire a rental property. But as long as you're buying a primary residence, you can use it over and over and over again. Another myth or misbelief is that you cannot have two VA loans outstanding at once. So a lot of people believe that if I have a VA loan now, I have to refinance that or sell that home before getting into another home and using my VA benefit. And the answer is that you actually don't have to do that. You can actually have two VA loans outstanding. It all depends upon how much entitlement was used on your first transaction or the one that still has the VA loan and how much entitlement remains and how much what purchase price you're trying to do. So that's a calculation that's a little bit more complicated, but we can always help with that should you be find yourself in that situation. So there are also people don't always realize, but you don't have to buy just a single family home. You actually have the ability to purchase a multifamily home up to a fourplex using the VA home loan. So 1 to 4 units is considered residential. Anything beyond that is it goes into a commercial category. But as long as one of the units is going to be occupied, it's actually considered owner occupied and it's eligible. and you actually, the rent that's going to be received from the other 3 units can actually help to offset your mortgage payment. So you actually could qualify for a much bigger home than you would on a single family, because you have some rent that's going to be coming in to help with that monthly payment. So, another true or false, my non veteran spouse's income can be used to qualify for the home that we want to buy. And the answer is it's true. A spouse's income can absolutely be used as long as it is stable and it's from an acceptable source, just like any other loan. And the income of a spouse, as long as that income has a qualifying credit score and is going to be on the loan, that income can be used. Now, in the event where the spouse's credit score is not sufficient to be on the loan, then in that case, that spouse's income would not be used. So there are certain circumstances where a VA loan may not be the best option. It really depends on, like maybe in the example where it's a veteran and a fiance. They're not married yet, but we need both incomes to be able to qualify for their desired purchase price. In that case, if they're not willing to get married before and we don't want to go through the hassle of the joint loan, then in that case, it may make sense to explore other options. So that's a conversation to be had with your lender. And but it's very few situations. Most of the time, the VA loan does make sense. So as far as the home buying process, your first step is to get pre-approved for the loan. After that, that's when you're going to start looking at homes that fit your criteria, and your realtor is going to be the one that's going to help make offers and negotiate terms. So a lot of times we have folks that come to us and they have actually started shopping for homes before getting pre-approved. So when I want to ask the question, should you start your process by finding the home, or should you get pre-approved for a home loan first? The answer is you should get pre-approved first. The reason is because we want to make sure that the purchase price that you are shopping in is in fact the purchase price that is going to fit your budget, and that we don't start shopping in a price point of homes that's going to yield a payment that's not you're not going to be comfortable with, or that you don't qualify for. So it's always best to work the numbers first. Also, who pays the buyer's realtor? The answer is it is not the buyer in most cases, at least here in Texas. The seller is the whenever a home is listed, it is actually negotiated through the listing contract with the listing agent that the seller is going to be paying their real estate commission. That's what's traditional and typical here in Texas. So you, as the buyer, do not actually pay the commission for a realtor. So as far as the home buying process, once you get your contract accepted, then the escrow is open with the title company, and lenders can now begin the official loan process. We order the appraisal, and that's also when the realtor, then the buyer's realtor, will then order inspections and begin any of the due diligence type negotiations, things like that. So we just mentioned two terms, an appraisal and an inspection. And a lot of times those are confused and used interchangeably incorrectly. So let's talk about what an inspection is first. A home inspection is something that is optional, and a buyer will hire an inspector to go out and do an examination of the condition of the home, and we'll look at basically what all is going on with the home. We'll look at a very deep dive. They're usually there for several hours, and we'll look at the condition of the roof and electrical, plumbing, structural. Is there anything that's of concern with the home? Now, an appraisal is something that is we actually order. In this case, we would order the appraisal directly through the VA, and an appraisal is used to determine the value of a home for lending purposes. Now, an appraisal is the lender's version of an inspection, and many factors will go into that value, such as other properties sold, conditions and health and safety, things like that. But what really a VA appraisal is looking for is it residential in nature? Is it safe? Is it adequate heating and cooling? Here in Texas, we got to make sure we have the cooling aspect too. Is the water? Is there access to water? Is there any health or safety concerns? Nothing that's like there's mold or anything like that. We want to make sure that there's access, there's no obstructions preventing any access to the home on entering or exiting. There's also no evidence of termites. VA cares a lot about termites. We want to make sure there's no issues with wood or any of that, and that there's no any kind of water or moisture gathering anywhere that would present any issues that could be conducive to mold. So the big things really are that can be red flags for VA loans, and honestly, it can be red flags for all loans. But the highlights are really termites, wood rot, plumbing leaks, and anything that's lead-based paint there. So there's resolutions for a lot of these things, but it basically we want to make sure that those are addressed. So to finish out the home buying process, now that you've got inspections and appraisals been ordered, all that fun stuff, now you're going to be shopping for your homeowner's insurance to select who you want to use for your insurance carrier. The VA does not choose that for you. The lender does not choose it for you. We could be happy to be a resource to recommend local insurance providers, but that is a carrier that you would choose on your own. We, as a lender, would then perform necessary verifications for underwriting, and the underwriting will review the file to clear all conditions needed for final approval. And then at that point, you will do a final walkthrough to make sure the home is still in the condition that you're agreeing to buy it in. The loan is clear to close, and all the documents are signed at the title company. And then at that point, the loan funds, and it's recorded at the county clerk's office. And now you get the keys to the home. So I hope you found this information helpful. Just want to say thank you for your time. Thank you for your service. If you have any questions at all, please don't hesitate to reach out to myself. My email address is listed here on this screen. You can also call or text me at this email or this phone number as well. And I hope you have a great day and look forward to talking to you soon.